Hi, I'm James Dunn. Welcome to the Inside Network.
Joining us today to discuss emerging markets, we have Alison Shimada from Allspring Global Investments. Welcome, Alison.
Thank you.
Emerging markets are changing from being a producer for the rest of the world to more in charge of its own destiny. How are companies and yourselves addressing that transition?
We really recognize that they're coming into their own right, and they're not simply, as you say, exporters to the rest of the world anymore, although it still remains an important aspect of emerging markets. But we really feel that they have really upgraded their own shareholder returns and also their attention to minority shareholders in emerging markets. And this is an aspect that you would expect with the evolution of this particular asset class, that people evolve. And they do pay attention to their local investors, and they pay them more cash dividends, buybacks, spin-offs as well. And this is really important to keep investors engaged in the local markets.
Interesting. EM's a very broad canvas of many countries. Sometimes you think it's not an appropriate designation, is a simple one. And not all of them have great demographics or IT advantages. But how do you actually judge which countries are particularly attractive to look for opportunities?
We really look at the macroeconomic framework, and each analyst on our team has a specific view about each country and the prospects for those. For example, the prospects for inflation, also GDP growth, employment, etc. And we really think hard about those things. From there, we can decide which countries look the most attractive, and also which sectors and specific stocks also look most attractive. So the macroeconomic framework is very important in stock selection.
How do you suggest we think about the role of emerging markets in the portfolio today?
I think regardless of all the news that is going on about emerging markets and globally, it's really important to have diversification. So recently I've heard many people are very interested in the IT sector in the US, but that's only one sector in one country. And I think really at some point things turn a different direction, and it's difficult to be in there too late. So you really want to have at all times some type of allocation to emerging markets. And I know that it's underperformed developed markets over the last 10 years or so, but it's still, there's a lot of attractive stocks with a lot of shareholder return that one would want to participate in.
Very important part of what you do is obviously select the companies for the portfolio. There are structural inefficiencies in emerging markets that are not as obvious as the more obvious perhaps than what they are in the developed world. How do you actually find those options, and can you give us some examples?
Sure. Well, we also, in addition to a macro framework, the analysts do visit with 400 to 600 companies a year, either virtually or in person. And we look at each company, and they bring ideas to us, the portfolio managers, and the portfolio managers, we have ideas for them thematically. So we have a lot of discussion throughout the year about various ideas. And you have to, it's very much a stock selection market, and you have to get the stocks right. It's not simply about trends, and you really need to look at each company and do the fundamental analysis and the macroeconomic analysis as well. So that's how we find or source these ideas. And then examples of them would be things like one interesting company in India is Bajaj Auto, which is, for two-wheelers or motorcycles. They're experiencing strong demand in the rural areas as well as the urban areas. But it's a rapidly developing country, as you know. It's a multi-year structural story in India, so you do want to have access to that area. And they do also pay a nice dividend of between 3 to 4%, so we enjoy that. Also, I would say that there are countries like Mexico, which is very much a recipient of whatever effect is going on in the US. So right now we're very interested in the industrial REIT area, because we really feel that friend-shoring, near-shoring, Mexico will benefit from future industrial development, and that might be related to the US auto sector, or there's a kind of a re-engagement with Mexico around China. So the supply chain may shift a little bit to Latin America instead.
Many clients are sometimes somewhat concerned about governance and responsible investing in their portfolios, and still remain very focused on making sure that they don't expose themselves unnecessarily. How has EM evolved in terms of responsible investing from your observation in the last years?
Yes, I think that's a very relevant question because there's a perception that it's quite far behind, but actually I see much better corporates, sort of social responsibility reports in emerging markets sometimes than I do in developed markets. And I think it's come a long way. And I think it will still has a ways to go, but I think that we're Article 8 compliant in Europe, and we look at each company and integrate ESG factors, particularly the E, the environmental, so carbon footprint, and having a lower than average carbon footprint or emissions is very important. We also look at corporate governance, but through the lens of total return. So oftentimes, managements are very proactive in their corporate governance because they're also paying minorities dividends, et cetera. You don't have to do that. So it's also quite a sign of good quality on a stock. And then social equity, we think about things like human trafficking or difficult like labor situations, and make sure that the companies are not involved in that. So we question the companies very significantly, and we on multiple times a year, and we have to also write very detailed reports about that. So the analysts integrate that into their thinking on the fundamentals on each stock.
Thank you, Alison. The experience in emerging markets is very enlightening.
Thank you very much.